Good morning, ladies and gentlemen. It is morning when I'm recording this. My name is Pavel Sverdlin. Thank you for joining in Ascending Abundance YouTube channel, where I cover various strategies on how to make more money with the existing capital. We got stocks, crypto, business, anything. Real estate is my favorite. And I will show you in this video the recent couple of deals that were kind of sent to me by well-meaning friends realtors who said this is the deal. Or at least a good opportunity in Canada. So it just gives you a perspective as to why my recent videos has been not real estate, that's been real stocks or crypto or whatnot, because real estate in my view is a little crazy, continues to be crazy, and it's just stopped making sense with the interest rates that we got. So first deal, a student rental in Waterloo. This is a nice-ish looking condo. It's an apartment next to the university. You got 5 bedrooms, so it's rented for 5 students, and it rents for apparently nearly 4,000 bucks. So 5 bedrooms, 2 baths, fully furnished, all that good stuff. 5,000 bucks, costs $600,000, and it's Waterloo. It's not Toronto. So I'm like, okay, simple math. You go look at some mortgage is, and I don't have any free money, so the way I calculate it is the full entire principal amount of the purchase price needs to make sense to me. I'm not going to put 20% down payment, have no cost associated with it. My equity is costless? No. My equity has at least the same rate of return as the rest of the loan, if not more. I actually would like my equity to cost way more and bring me 15 to 20% annualized. That's my kind of target. So that condo was $610,000. Well, let's say we negotiated it down a bit, closing costs, this, that, doesn't matter. $600,000 even, 30 years mortgage, and I'm saying let it be 5%. Today's mortgages go at 6, 6.5, 7, depends on your credit history. Nobody's getting 5, I am pretty sure. 5 would be some promotional rate, and it will be higher than 5. So I'm thinking once the rates are going to go down, so this is already in the future, let's say a year from now, the rates are going to hopefully go a little bit lower, and we're going to see 5% interest rates. So 3,200, not too bad. However, this place has a condo fees, maintenance fees, 600,000. So we're at, like, I'm doing rough math. I don't even need to do more. It's like 600 bucks on top. That's 3,800 right there. And then there is obviously property taxes. That's another $300. So we are already above the supposed revenue that this thing brings in. And not to mention that there's going to be maintenance. There's going to be vacancies. There's going to be, it's fully furnished, so the maintenance is going to be higher than the typical. There's going to be quite a bit of effort to keep all 5 bedrooms occupied, because, you know, turnover for students is way higher than your typical long-term family type of occupied unit. So you gotta discount this. You gotta put some maintenance and some vacancy in. So either way, I'm looking at the interest rates that are lower, and I'm not seeing any kind of cash flow. It's negative. Even the principal repayment on this mortgage is going to be fairly small. Like if you say, oh, it's one pocket to the other pocket, that's kind of the argument that is typically made. In the first few years, you're making $10,000 a year of principal repayment, give or take. Right? Not even, maybe nine something. It's going to go up to 10 in like year 4. So maybe you're making, what is it, 800 bucks in principal repayments, but with all of the extras and potential vacancies and all the hustle, I don't think we're going to see anything, just literally anything. Even the principal repayment is just going to go, whew, and the cash flow is definitely going to be negative. So that negative cash flow is going to go towards the principal, and net, we're hoping to see maybe a couple $100 positive with so much effort on top of it. So this is not a deal. I mean, maybe for some of you, you would want to look up $600,000 of a loan, control this property, kind of make the numbers work, go negative 500 bucks a month to 600 bucks a month, or maybe even whole 800 bucks a month, which will then you gonna make back because the principal is being paid off. So you're kind of net zero. Maybe there is 200 bucks of principal repayment you're gonna see, and you're gonna hustle and you're gonna keep this place occupied, and hopefully many years from now you will see some positive upside. I'm not poo-pooing this in principle, however it's not a deal, not something I would jump into. Anyway, spending a little too long on this one. Here's another one. This one not Waterloo, this is Barrie. Barrie is a little town of about 150,000 people, up above from Toronto, really short drive, about 50 minutes at most. And this house, believe it or not, is a legal triplex. It's 1954. It's not overly renovated. It's just kind of been, I was told it's kind of been prettied up, but it is a legal triplex, and it's right sort of downtown Barrie. I think it's a good location. I'm not so sure, but the previous owners bought it for 860,000. I am presuming they want $1 million. This is off market for now. I'm presuming they want $1 million. So if we go with that estimate, so the $1 million is with 5% interest again, $1 million mortgage, 30 years. This is going to be $5,300. That whole place, even though it's a triplex, if I'm lucky, may bring 5,000, maybe. And that's fully vacant, fully occupied, no vacancies, no maintenance, which is unreal for a triplex to have no maintenance. That is with no kind of overhead, obviously, in 1954, so it's got to have some maintenance. There's property taxes here. I think I've seen them. Property taxes, 4,000 a year. That's another 350 bucks, give or take, right? So principal repayment on this one, because it's $1 million, is going to be nicer than the previous one that we just saw. So I'm gonna run this down. So it's about 16,000 a year. So you're kind of decent. Let's go into Excel. Just take a look what that comes up to. Do a quick calculation. I don't know. Let's take 16,000 divided by 12 months. So you're looking at $1,300 principal repayment. But let's just say quickly, the mortgage was $5,350. Property taxes 4,000 a year is 3,000. Insurance, something I didn't even count in the previous example. Insurance, let's give it $150. Then maintenance, what do you say? $250 a month, just 3,000 a year for a triplex. Roof, 1954 house, roof, furnace, washing machines, dryers, laundry, I don't know, dishwasher, anything, right? And then when the tenant moves out, you have to do the reno, and renovations are expensive, and you have 3 tenants, so pretty much guaranteed every year or two you're going to have somebody moving out, so you're going to renovate that part of the house, and there's also vacancy in there, so 250 I think is actually very conservative. What else could be there? Oh, those are kind of my basics, I guess. So we are at $6,000. The place rents, I think, as 5,000, kind of ish, reasonable estimate, if all goes well. So you're down $1,000. You're making 1,300 in principal repayments, kind of, but the interest rates go down to 5, which they're not right now. So right now you'll be completely negative. In the future, you might be making something like $200 to $300 if things go well, if your tenants pay, if the renovations are not overly expensive, if. Lots of if, and even then you're like maybe getting $300. And you're hoping, obviously, that the prices are going to go up, but the interest rates are going to be dropping. Maybe in a few years from now, 3, 5, God knows how long you're going to keep it. Then maybe this house is not going to be $1 million. Maybe it's going to be 1.1. Maybe it's 1.2. Maybe eventually 1.5, and so on. And that's how you build your equity. Again, not poo-pooing this strategy. It is something to consider, but it's not a deal by any means. I mean, negative cash flow of $1,000 a month, this is negative cash flow. I'm gonna have to pay this to the bank just to see the principal continue to reduce. That's $1,000 out of my pocket. That is effort for keeping the tenants. The laws in Ontario really favor the tenant. You could get burned. They can stop paying. Suing them, and landlord-tenant board decisions take 6 months to a year. Renovations do come at quite a bit of cost. Vacancies, this, that. It could be a nightmare. So I would want to see a positive. So what I would want to see, I would want to see this cost. If it's, let's say the cost is 6,000, I want to see this one renting for 7,000, having a positive cash flow of $1,000, right? This is positive. Then 900, whatever. I just made this up, right? So have a positive cash flow of $1,000. Then you have this extra money coming in for any unforeseen expenses, any kind of vacancies, any kind of hustle, your own time for traveling back and forth, doing these renos, and your principal is being repaid. Okay, well, if we're making this much money, so principal repayment plus the positive cash flow, 2,000 something dollars, on $1 million house, that's actually not that much if you think about it. Like $2,000 a month, that's $24,000 a year. The deal is about $1 million, so that's your risk, right? Put another zero there. You're really just kind of netting down 2%, right? Like this is your kind of rate of return, NOI, whatever you call it. So not big, nothing to brag about. So I'm not calling these deals. This is just an opportunity that I am passing by. Having this in the negative is not my goal. So thanks for listening to me vent, and let's keep making more money elsewhere. Real estate is not something I'm looking at in Canada at the moment.